So, you're getting ready to buy a house. Well, that's great. Now, you might be wondering about FHA loans. And if you've got questions, well, I'm about to walk you through everything you need to get approved for an FHA loan. That's right. In this video, we're going to look at the minimum credit score you need to get qualified for an FHA loan in 2023. Now, your credit score is a big part of the approval process, and I'll explain why and how exactly it affects you. So stick around and we'll unlock the door to your new home. Great to have you back on the channel. I'm Andy from Credit Sage, and we're just what you need to help you smash your credit goals. With over 3,000 reviews for a 4.9 out of 5 Trustpilot rating, we've got you covered on all financial fronts. Today, I've got a few juicy tips guaranteed to get you many steps forward on the road to homeownership. You do not want to miss this. So let's get started straight away. First, we'll answer the question, what is an FHA loan? Now, you may already know this, but if you don't, and just making sure we're all on the same page here, an FHA loan is a type of mortgage loan that is insured by the Federal Housing Administration, FHA, which is part of the U.S. Department of Housing and Urban Development, HUD. FHA loans exist to make homeownership more accessible and affordable to a broader range of borrowers. Now, the core targets are first-time home buyers and those with low to moderate income. FHA loans come in different types, each catering to the specific needs of the borrowers. The most common type is a purchase loan, designed for home buyers seeking to buy a new home. FHA loans have a couple of tweaks to make them more suitable for the intended demographic. For example, one advantage of an FHA loan is that it's assumable. Now, this means that if you decide to sell your home, the buyer can take over your existing loan. This could be very appealing to potential buyers, making it easier to sell a home. Additionally, FHA loans typically have lower down payment requirements than conventional loans, as low as 3.5% of the purchase price sometimes. They also have more flexible credit score requirements, with a minimum credit score of 580. So even if your credit score isn't perfect, you still have a shot at securing an FHA loan. Contrary to popular belief, FHA loans are not actually issued by the government. Instead, the Federal Housing Administration, FHA, acts as an insurance agency, providing lenders such as banks and credit unions with insurance for the loans they issue. Now, this means if a borrower defaults on their loan, the FHA will reimburse the lender for some or all of the losses incurred. So, while the government sets minimum requirements for FHA borrowers, such as the minimum credit score needed to qualify for the loan, each lender is free to set their own standards. This can be a higher credit score or additional requirements beyond what the government mandates. All of this depends on the level of risk the lender is willing to tolerate. Now, for this reason, it's important to shop around and compare offers from different lenders when applying for an FHA loan. Not all FHA loans are created equal. Now, besides your credit score, one key factor to consider is your debt-to-income ratio, which is capped at 43%, but may allow for higher limits in some cases. You'll also want to keep in mind the loan limits, which can vary depending on your location and your mortgage insurance requirements, which may be required for the entire loan term if your down payment is less than 10%. And of course, verifying your employment and income is a must to ensure that you're eligible for the loan. As I said earlier, the minimum credit score that you'll need for an FHA loan is a credit score of 580. And you can still qualify with a lower score. However, having a higher score comes with a slew of benefits. The thing is, the credit score requirement exists to help lenders assess the risk of lending money to a borrower. Your credit score is a reflection of your credit worthiness and shows how likely you are to repay your debt on time. By setting a minimum requirement, lenders can confirm that the borrowers have a history of responsible credit use and are more likely to repay their loans. So, a higher credit score indicates that you are a lower risk of defaulting on your loan, making lenders more willing to extend credit to you. Now, like I said, FHA loans have flexible credit requirements, so you can qualify with a low credit score. However, borrowers with lower credit scores will need to make larger down payments, up to 10% if you're between $500 to $579. Also, you will most likely be offered higher interest rates, which can make your monthly payments more expensive and cost you more in the long run. Having a higher credit score can help you qualify for an FHA loan, but it can also help you get better loan terms, such as lower interest rates. This can ultimately save you money over the life of the loan. So, even if you have the minimum credit score, you should be looking to improve it. The better your score, the better the terms you'll get on your loan. It's simple as that. Lucky for you, I'm going to now explain how you can improve your credit score with just a few steps. Now, whether you're already in a good place and you want to get better, or you're pretty low and you want to improve, I've got you covered. You can go about it in several ways. However, I've got a tip that's gonna get you the best results. It's pretty simple, and all you have to do is hand it over to a team of professionals. If you don't have time to handle the task of managing your credit, or you're uncertain about its complexities, we've got you. Take the stress out of the whole process by reaching out to Credit Sage. We've got experts on call who know exactly how to get your credit back on track and give you that extra boost you need. Now, there are a lot of things to consider when getting a house, but this is one area you do not have to bother about. Our Credit Sages have the expertise to identify potential issues and resolve them with ease. So save yourself the hassle and give us a call using the number in the description below. Now we're going to look at some practical steps that you can do right now to help improve your credit score or even attain the minimum for an FHA loan. This starts with getting a hold of your credit report. Did you know that you're entitled to a free report every 12 months from each of the 3 major credit reporting agencies? And you can easily get a free copy from annualcreditreport.com. The point of this is to go through the document to spot any errors or inaccuracies that could be hurting your credit score that you, quite frankly, don't deserve. So review the report and dispute any inaccuracies you find with the agencies. Now, to actually raise your score, try paying your bills on time. Your payment history is one of the top factors weighing down your credit score. Late payments can significantly impact your score, so make sure you pay all your bills on time, and even better if it's early. You can set up automatic payments or reminders to ensure you don't miss any payments. Another thing to do is reduce your credit utilization. Now, your credit utilization is the ratio of the amount of credit you're using compared to the credit limit that you have. It'll do your score a lot of good to keep this ratio under 30%. For those with higher balances, start working at paying them down as much as you can month over month. Now, every time you apply for credit, it can temporarily lower your credit score. This is because each time you apply for credit, it generates a hard inquiry on your credit report. So unless it's absolutely necessary, avoid applying for new credit, especially if you're planning to apply for a mortgage soon. Also, try to keep your old accounts open. I know this sounds a little counterintuitive, and I explained earlier that lenders are looking at your credit history to assess your eligibility. So keeping old accounts open, even if you don't use them, can help improve your credit score. At the same time, closing old credit accounts can actually hurt your score by shortening your credit history. Lastly, you should consider a credit builder loan or secured credit card. If you're really struggling to build your credit, a credit builder loan can help. These loans are designed to help you build credit by making small monthly payments. As you make payments, the lender reports your payments to the credit bureaus, which can ultimately help improve your credit score. Above all else, be patient. With all of these steps, it's important to understand it takes time. And looking at it on a long-term approach is important to improve your credit score. You will gradually and ultimately build a strong credit history that will serve you well in the long run. Now, after hearing all of this, it's totally fine if you're still feeling a bit overwhelmed. There's a lot of steps there. And I want to take a moment to circle back to option 1, which is Credit Sage's service offering features a quick and easy phone call. And our number will be in the description. And it only takes a couple of minutes to sign up. And then from there, the task of managing your credit is off of your shoulders. So sit back and relax and let our experts dig into getting your credit score the way you need it and setting you up for home ownership. If you found this video helpful, please show your support by hitting the like and subscribe button to our channel for new videos each week, and thank you for watching.